What about all the costs associated with their flights, their travels, their entertainment, meeting different people, selling the business? How are they classified? Do they all get considered as far as PAYE is concerned? Hi, welcome to Crowe Corner with Business Solutions. Today I'm joined by Kenny Lowe. Kenny specializes in cross-border hiring and deployment of staff. So Kenny, I've had questions over the years regarding tourist visas and business visas. Now, when you're on tourist visa, it's quite understandable and very common that you don't do any work because you're there on vacation. But I have had questions where people have gone, well, surely if I'm here on a tourist visa, if I do a little bit of work, that should be okay. What are your thoughts on that?
Good question.
Yeah.
So the general rule is that the immigration position has no bearing on the tax treatment. So strictly speaking, if you carry out work on UK soil, then it's taxable in the UK, even if it was one day worked in the UK. So if you're on a tourist visa coming into the UK and you carry out work, the fact that you're on a tourist visa doesn't necessarily mean it's not taxable.
How do things change if it's a business visa?
Well, again, so the general position is that the immigration position has no bearing, but you would first look at whether the work carried out in the UK is regarded as incidental or not. So what that means is it really incidental to your day-to-day duties or normal to the day-to-day duties which you carry out abroad. And if it's incidental, then it's regarded as a non-taxable UK workday.
Okay.
A good example of incidental work would be if you're visiting the UK to attend internal meetings, trading events. If it's regarded as not incidental because it really is just part of your day-to-day duties, then it's regarded as a taxable workday. But at this point, you would check whether the business trip qualifies for exemption from tax under a double tax treaty between the UK and the visitor's home country. The UK has double tax treaties with most countries around the world, but the visitor has to meet various conditions that are laid out in the treaty, such as they have to spend no more than 183 days in the UK in a 12-month period. They have to remain tax resident in their home country, and their economic employer has to be located outside the UK. And broadly speaking, what that means is the economic employer is the entity that bears the risk and responsibility of the work carried out in the UK, which isn't always the entity that employs them, that legally employs them.
Interesting. So would it be fair to say that a lot of the business trips to the UK would then, as a result, just be deemed as non-taxable?
Yeah, I think that's a fair comment. Otherwise, you would have business travellers, just triggering liabilities all around the world. You might think, why has it not happened? And it's precisely because we have these double tax treaties.
So does that mean that the UK companies wouldn't have any tax reporting requirements?
Even where you have treaty exemption in place, HMRC will still require the UK companies to operate pay-as-you-earn on the business travellers' UK workdays. It's also worth mentioning that certain types of business visitors can never qualify for treaty exemption. An example of that is a business traveller who's employed by an overseas branch of a UK company. And the reasoning behind that is that their economic employer can only ever be the UK company. But for these types of people, there is a relaxed reporting regime available, because starting point is that their days will be taxable, subject to pay-as-you-earn, because they don't get that treaty exemption. But under this reporting regime, this relaxed reporting regime, they can handle that pay-as-you-earn reporting obligation through a one-time submission following the end of the tax year.
Great, thanks, Kenny. Whilst we're on the topic of business travellers to the UK, what about individuals who visit the UK as a result of their directorship holding in a board?
Board directors of a UK company, they're another type of visitor to the UK, if you want to call them that, unfortunately, who will never qualify for treaty exemption. Because they're office holders of the company, then the work they carry out in the UK will always be regarded as non-incidental. And the economic employer will always be the UK company as well. So what does that mean? So it means their UK work days will always be taxable. There's no relaxed reporting regime available for them either. So to ensure pay-as-you-earn compliance, the UK company will have to put them on the UK payroll, report their earnings on a real-time basis.
So obviously we talked about non-executive directors and their roles, but what about all the costs associated with their flights, their travels, their entertainment, meeting different people, selling the business? How are they classified? Do they all get considered as far as PAYE is concerned?
Yeah, potentially, yes. It's a good question. So you'd have to do a proper analysis. Some of those costs might qualify for tax relief.
Okay.
Some of them might not. And so you'd have to do that analysis. Different rules apply to different types of costs, potentially. So it's definitely something worth checking because the tax on the benefits can be substantial and they can trigger additional reporting obligations in the UK, such as Form P11D filings.
Thanks, Kenny. Plenty to think about there, especially for board directors who live abroad. I hope you enjoyed today's episode and I look forward to seeing you next time.